What's going on, guys? This is the Chop It Up show only on 1:37 p.m. I'm your host, John Henry.
And I'm Brandon Bryant, and we are breaking down business and culture through the entrepreneur lens. All right, whether that's million-dollar deals or flipping kicks on StockX, we are here to help you in your hustle, whatever that may be.
Now, first up, in case you missed it, it's IPO season, baby.
Ding, 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 ding.
Can we have a make it rain emoji?
Yes, please.
The IPO is the most difficult and also the most coveted thing to get to in startup land. What is an IPO? Well, an IPO is an initial public offering. It's the process by which a private company gets to sell its shares to the general public, AKA you get rich.
Do you accept cash?
So one important thing to note, when you're venture investors or angel investors, you have access to these companies way before the general public does. You might have invested in Airbnb if you knew the founders or were in the network. And so what happens is their companies grow and grow and grow. And then eventually they get to the point where they're big enough to sell to the general public. And that is what we call a liquidation event, which means all the investors who invested early get really flush with cash, so do the founders, and then the general public has an opportunity to start participating and buying shares. But it's incredibly important to note that this year in particular, we're gonna see a record number of IPOs.
Man, we just seen a really cool one, if you didn't know, Levi Strauss. And I thought this was really dope because a lot of the newscasters on all the segments were wearing Levi's when they were IPO, so that was pretty cool. And then you have some other people who are on the way potentially to an IPO down the line. You have Glossier, who just raised well over $100 million. They're valued, and they're a unicorn now, so valued at $1 billion. And then also you have the Runway. So the ladies are coming in strong right now and getting the unicorn zone. So in terms of IPO season, like what does that really mean for our viewer?
Well, one important thing to note here is that a lot of the companies that are going public are actually running at a loss, which means they're not profitable. And in fact, on their SEC filing, they will explicitly state, as lifted, we are not profitable and we may never be profitable. Now, that sounds alarming, but I do want you guys to know that that is completely standard in the IPO process. You're setting the expectations for investors, and it's a very common thing to be more conservative than to be over-aggressive and over-assertive. Now, some things to note. I think a lot of these companies are growing rapidly. So if your revenue is growing 30 or even 40% year over year, in my opinion, it's okay to be running at a loss because they're only running at a loss because they're investing in new growth, in new markets. I think that if they pull back on investing into new growth whenever they feel that's appropriate, they can hit a stage where they're profitable. But so what does this mean for our audience? Can they and should they invest in the IPOs? What do you think?
Right, and for example, if you want to talk about Levi's, they had a 32% jump on the day that they opened. And some people may be wondering like, man, I really missed out. Guys, just think about it in a very smart, long-form way or long-term way.
Right.
Us as investors, we invest in a company early and we wait about 7 to 10 years to see that liquidity event, that opportunity to get cash back. We think you guys should think the same way.
That's
so
right.
Buy and hold, no day trading. Stay away from day trading.
Yep.
The market continually goes up. Even after a downturn, maybe save some money on the side if there's a downturn so that you can, as soon as the market starts going up, you can participate in these wins. 10-year bull market?
Yeah, I know.
I'll take it.
The key takeaway here is, remember, you're going up against institutions that have far better access than the regular person. So when you invest, please only invest what you can afford to lose. You don't want to get in a position where the trade gets volatile, you have to pull out and you take a big haircut on your money. We care about you, we want you to make some money. We do want to encourage you to invest, but just invest in companies that you believe in long term.
Thanks, John. That was a great point. It's an exciting time to be alive and to be participating in IPOs. So guys, let us know in the comments which ones you are excited about, and if you do jump in the market, let us know in the comments. Thanks.
Well, speaking of investments, let's get into new hashtag math. It's been a little while. B, what you got for us?
Yes, everyone's trying to get ahead in investing. Everyone's trying to get a little monies going in the market. And today we're going to talk about a company called Fundrise that gives you an opportunity to invest in real estate.
So crowd-funded real estate, it's a new hot thing. Essentially, the SEC passed a new law maybe a couple years ago that allows regular everyday people to participate in assets and investments that otherwise you wouldn't have had access to. One of those is commercial real estate. So there are companies that buy multi-million-dollar assets and then they sell off little shares, $500 at a time, to the general public. So this is the crowd-funded real estate model. And in this space, there are a number of big players. Fundrise, Realty Mogul, Realty Shares, CrowdStreet, there's a number of these players. The power of crowdfunding comes in the sheer amount of volume of investments that you can get from the general public. So if the shares were available at $25,000, a lot less people could participate. On the flip side, with this new SEC regulation, if you could participate in a big investment for just $500, you can bet that there would be a massive wave of people that would be interested in participating with the right kind of marketing. So a company like Fundrise accepts investments from the public, raises something like $25 or $50 million, and then they go and they buy these large assets. The key thing to know about crowdfunded real estate is exactly that, the low barrier to entry. Before crowdfunded real estate, there was no way that you were gonna buy an investment with $500. It's just not gonna happen. And so now the everyday regular person can, as Brandon said, participate and just be exposed to what it's like. Now the danger though, is that you are putting your money into a company that you typically have no access to the management, you have no access to the property. Wow. You know, there's several degrees of separation between you and the real estate. You're not actually buying the physical real estate as much as you are buying some shares in the real estate, if that makes sense. And so as a cautionary tale, Realty Shares, one of the largest players in the space, controlled something like $800 million worth of real estate, and they recently went defunct because they could no longer raise capital to sustain their operations. What happens? Well, you lose your money, unfortunately. So the good side is you can get in with $500. The bad side is you might lose your money. So the common theme here, when we talked about IPOs, we've talked about a lot of things here. You only invest what you can afford to lose, guys. You only invest what you can afford to lose.
I think the crowdfunding is purely around learning, from my perspective.
Yeah.
You can't make $1 million in crowdfunding, but you could put $1,500 to work and have an excellent return, learn about the market, and move on to bigger and badder deals that you're actually running yourself.
Yeah, exactly, and that's really the key takeaway. Your upside in these deals is capped. You're capped at 7 or 10% or whatever the deal is, and so the people really making the money are the operators of the deal itself. So they raise a ton of money, offer pretty low returns, and they make a lot of the money themselves, but they're also the ones taking on the risk.
True.
So I think you're right. That's how I would approach crowdfunding as well. I would put in $500, $1,000 just to be exposed to the machine and figure out if you like it or not. And
soak
if you
all
like
those
it,
ingredients up like a sponge, man.
Exactly.
And then put it into your own secret sauce and then rock with it.
Oh, yum.
Which leads us back to what's important to us most. You guys. And giving you guys great answers and takeaway information, especially in terms of investing.
Okay, so let's let them know that we heard y'all. We're gonna get into some questions, comments, etc. Hope we can be useful here. First question from Mukwenda Kandol said, loved this episode, thank you. Could you talk on when it would be smart for a young entrepreneur to start investing into real estate, stocks, etc.? How much cash do you need to start, and what training programs are out there to help new investors? The question says, when is the right time for a young entrepreneur to start investing? Here's my thing. There's a reason for the season, guys. There's gonna be a time and place for everything. You don't have to take everything on all at once. So right now, if you're building your own personal business, I would not be investing in anything other than your own personal business. If you have an interest in getting into real estate, my biggest advice is to start looking at property. This is something that I did for years before I bought my own property. I would call the broker, pretend like I had money, which I didn't, and I would say, hey, I'm ready to buy this 30 days all cash. Are you going to show me around or not? Wow. And then the broker is going to treat you with a new level of access. He's going to show you around, show you all the defects, and then you start getting in the buying process. So if you do that for a year or two, you will get your chops up, and eventually you'll be ready by the time you're ready to buy.
Wow, that was fucking great. And our second question is from Cool Guy Crypto, dope username. He asked, what's your opinion on holding cash to invest in the next recession or just to go ahead and invest now?
Great question.
This is a great question. This is a great question. I would almost do like 60-40, right? I could invest potentially 60% of my money or potentially 40% of my money, vice versa, and hold the rest for opportunities during the recession, because you're gonna be able to get things, you know, pennies, nickels on the dollar when the recession hits, but you don't want to miss out on opportunities right now. We are in the IPO gold rush or what have you. So there's opportunities for news and new companies to still execute really well right now.
Look, I couldn't agree more. I'm a buyer. I am a buyer.
Buyer.
Okay?
Buyer.
Meaning, like, I buy in every cycle of the market, and for me, I find that a lot of people will use the market cycles as a way to not jump in. They'll be like, hey, I don't know, the market's gonna, it's gonna recede. But if you're a buyer, if you're a player, you gotta be playing at every phase of the game, baby. I buy when we're high, when we're on the way down, when we're in the bottom, when we're on the way back up. I'm always looking for opportunities. You can always find a deal in any segment of the market cycle. So if you wanna jump in, I would encourage you to start small, but start now, because learning by doing is the best way.
Yeah, guys, there's no time like now, and you have to think like us. Like John actually put out a really good video talking about, think about 12 to 18 months, but also think about 40 years from now. So if you're thinking long term, the best time to start is now, because you continually learn with those reps, right? You're flexing that muscle of habits, of executing, and then you have experience. Experience is the best teacher. So when you keep learning from that individual experience, you continually get better, and the more wins, the more progress, the more confidence, the more opportunities, the more things that come to you. Wow. And at the end of the day, you're just gonna be like, wow, thanks John and Brandon, and we're gonna leave a comment.
That was a mic drop. All right, guys, well, we hope you guys dug this episode of Chop It Up. As you can see, we love answering you guys' comments, questions, and or concerns. So please call us out on our bullshit, chime in, let us know what you think. We're here for you guys, all right? Until next time, peace. That was a good one from Cool Guy Crypto. What's going on here, guys?
Guys, this isn't funny.
You're still on YouTube and you're not subscribed yet? Click that red button below, subscribe, and get the latest Chop It Up fresh to your inbox.